Welcome to our LinkedIn Live event hosted by Marvin Labs and Israelov Financial. Our topic today, semiconductors, Google and the AI disruption no analyst can ignore. Before I introduce Alex and Max, let's just go through what we're going to talk about today as a panel. This session centers on the convergence of three transformative forces: AI, the semiconductor industry, and the strategic challenges Google faces. AI is materially altering competitive dynamics across sectors. Nowhere is this more evident than in the semiconductor space, where capital expenditure, CapEx, has surged to meet the demand for high-performance computing. Simultaneously, Google faces an existential shift. As generative AI and chat-based search alter user behavior and data pathways, its core monetization model is under threat. And furthermore, investment research frameworks are being tested. Traditional models, assumptions, and valuations increasingly fail to account for AI's impact on margins, depreciation, R&D timelines, and competitive moats. We'll be discussing all of this, plus how analysts and investors interpret these converging disruptions, advocating for sharper analytical tools such as Marvin Labs, and updating CapEx modeling and more nuanced understandings of how AI reshapes economic fundamentals across industries. But before we get into the detail, let me introduce Alex, the co-founder and CEO of Marvin Labs. Alex, if you would like to introduce yourself and Marvin Labs.
Yeah, hi, James. Thank you for the intro and for hosting this. I'm Alex. I'm the CEO and co-founder of Marvin Labs. I used to be a hedge fund analyst and investment banker. Spent some of my career in startups as well. Founded and eventually sold my first company a few years ago, and have since then going back into the saddle of an entrepreneur. What we do at Marvin Labs is we build a co-pilot for professional investment analysts that helps them, particularly on the qualitative side of things, going through all the content companies put out in the form of press releases, earnings reports, filings, call transcripts, and telling investors what to look for and what they can safely ignore. So I'm eager to kind of discuss with Max and James about semiconductors today.
I think it's really interesting when you look at some of the earnings releases recently that Marvin's analyzed, such as Netflix, that got a lot of interest into the Netflix results, and even Starbucks today with significant reductions, I guess, where they're trying to get some short-term pain that will lead to some long-term gain would be the hope. It's interesting how quickly AI platforms are now analyzing that information and surfacing that data. Max, over to you just to introduce yourself as well.
Hi, everyone, and thank you, James, for the intro and for having me. My name is Max. My background is mostly, I've been an equity research analyst on the buy side, so focusing on global companies essentially across geographical regions, so US, UK, Europe, and China as well. And I've been a generalist, so no particular sector that I was exclusively specialized in, but I would say from a personal perspective, semiconductors has been of the most interest to me. And I'm excited to be part of this panel.
That's great. I think you and a few million other people at the moment are fascinated by the semiconductor questions. I know we're going to get right into it now, because I guess first question that we've had is, how is AI adoption changing the semiconductor CapEx cycle, and what should investors be recalibrating right now? I think that's a really interesting first question. Alex, why don't you take that one as the first one?
Yeah, so I mean, what we're really seeing across the board is that there's a huge explosion in CapEx. I think last year we were up like 75% to about 250 billion across kind of the big names in the space, the Microsoft, Meta, Google, Amazon, Oracle, Apple with some distance. We're expecting, I think, still to come in at 325-ish billion a year for this year. And then I think by the end of the decade, we'll expect it to be at 400. So it's a massive explosion in capex. That is, a lot of that is going into GPUs and into NVIDIA chips in particular, that have some challenges. Microsoft is clearly the big player in this space. They're doing probably somewhere around 85 billion this year. So roughly a third of spend. Kind of there's some noticeable difference, I think, in the space, which I find fascinating, particularly kind of between the big spenders, the Microsofts, the Metas, the Googles, and kind of on the other end, the companies that are noticeably absent on high capex, in particular in Apple.
I think you're right. I mean, one question for me is not just, as you say, the explosion, but what this will have further down the line on depreciation as well, and how you account for that, because that's changing, at the other end of the spectrum, as it were.
Yeah. I mean, depreciation is clearly. Look, I don't understand how people kind of can rationalize investments in a lot of GPUs right now, right? I mean, we're going into a new cycle on NVIDIA with Blackwell technology, and we're going into a very public announcement a few weeks ago where the company is accelerating the development cycle, right? So I find it hard to square, 3, 4, 5 year depreciation cycle with chips that are basically obsolete after a year or two in terms of bang for the buck. It's hard to square, and I think that's what a lot of people in the industry are struggling with, how to make sense of this.
I think that's a very good point, Max. What's your thoughts on that? And plus, also your passion for this sort of semiconductor question. I know it's a big topic for yourself.
I do agree with Alex in the sense that the useful life of those chips needs to be reevaluated and shortened. I think like 2 or 3 years sounds more realistic. And actually, Alex, James, if you put slide number 4, I just wanted to add some visuals on the capex. Yeah, we've seen some data, so estimates from Deutsche Bank on the left. They actually put the Big Four spend at 350 for this year. And then on the right, we have estimates from UBS, and this includes not just the Big Four, but all like global AI capex essentially. And if you look, what's another interesting point, the red line, this is the share of the Big Four companies, so Meta, Alphabet, Microsoft, and Amazon. And you can see it is expected to go down, meaning that other players are spending on AI infrastructure as well.
I think that's really interesting, isn't it? I mean, I know on a previous discussion on semiconductors, Alex, we've raised this question. You've put the point that you should be looking at firms where the spend on AI capex is diminishing. We think about Meta, for example, Apple, for example, compared to others.
Yeah, I think Apple is very, very much a fascinating story in this space, because the company, I mean, they're probably the biggest. I mean, they're the noticeable name that doesn't have a cloud business, right? Maybe that's kind of the big point that differentiates them from everyone else. Now, noticeably, Meta also doesn't have a cloud business and is spending, somewhere in the region of 40, 50, kind of guiding 65 billion this year. They have spent, I think, 40 last. So it's kind of interesting to see a different approach. And I think if you think about it in terms of use cases for AI, Meta and Apple kind of rank incredibly high in what you would ordinarily presume to be high return on investment use cases for AI, right? Meta can better target ads. Apple can, deliver AI assistance to phone users, which makes the phone more useful, and which makes a lot of their hardware more useful. and more valuable. So you can kind of see these two companies having really the use case for it and the ROI use cases for it, and they are kind of a bit more shy. And the ones that are ostensibly just building capacity for third parties, the Microsofts, the Amazons, they are gung ho and they are going guns blazing into investing in chips.
And Max, on that slide, what struck me was whilst there is a definite shift in the sort of bigger companies, it's still, was it 60% growth this year and 33% next year, which is still sizable as an overall market. I get the shift in the dynamics of who, but what's your thoughts on what's driving that outside of those big four, do you think?
I think just in general, we are still in the early innings of like AI monetization. I think companies are still figuring out and just investing upfront just to stay competitive. And we also have some like new generation of cloud companies like CoreWeave and Lambda, I believe, that exclude like AI focused specifically. And also a big chunk of the players also come from China. So they have their own wave. So yeah, I feel the big four companies, they essentially have the cash flow to fund this infrastructure build out. But then as it kind of like spreads out, I believe this is where the other players are now joining in.
Yeah, and go on. Sorry, Alex.
No, I'm curious, Max, because you brought up China. Like, what's your take on? Well, we've seen the NVIDIA story and the cryptic announcement from NVIDIA that they are expecting a massive impact on their export controls. Like, what do you see? And I mean, is there anybody emerging in China that is kind of building competitive chipsets?
Well, China has been trying to become self-sufficient in the semiconductors industry for a while now. I believe so. If we don't talk about the cutting edge technology, their capacity is quite strong, and they do have the players like SMIC and Huawei is in the game as well. But thinking about the cutting edge tech, I still think they have to catch up, and that there's more like investment needs, not just investments actually, like the whole ecosystem, the know-how, the knowledge, and then obviously the Taiwan comes in here as well. But just in general, I think the cross section of AI and geopolitics is like this standoff between US and China. It's kind of this what's the right word, like an apex right now. I mean, it's a very, very hot topic. That's what I'm trying to say.
Yeah.
And I guess we'll see, especially now with tariffs. Yeah, I think the situation is very fluid.
I think so. I mean, it took us 13 minutes to get to that T word, but which was obviously a big impact. I think with what do you think is to your point about some areas are sort of still learning? What do you think is the number one area that there's still a learning curve, or there's still maybe a gap?
Well, the production, actually, the manufacturing of advanced nodes. And actually, it's not just China. US doesn't have the capacity as well. I mean, they're trying to friendshore, I believe is the right term, and building out new fabs in Arizona. But again, like it's gonna take years, and I've heard that there are like delays already due to labor shortages. And then when you think about labor, it's not just like average labor, but you need a very specific kind of labor with the know-how. So yeah, and also again, like it takes years, if not decades, to build out this infrastructure when we think about the whole ecosystem.
I mean, there's this. I think this is the one in Arizona, right? It's this Intel facility that is.
Mm-hmm.
It's an Intel investment, right? That's the one in Arizona?
It's not just Intel, I believe. I believe it's TSMC as well.
Yeah. I think it's a fascinating case study in a public-private partnership, which places a lot of the burden on the public sector. I think the public sector is out something in the vicinity of 15 to 20 billion right now, and there's going to be a fab in, I think the most recent estimate is in 2031 or so. Which you're right? I mean, that's like these things take time to build out. It's fidgety and incredibly complicated technology. I'm more surprised though that there is no obvious challenger on NVIDIA coming from somewhere, and somewhere probably being China. Doesn't have to be on the cutting edge stuff, right? But we're also not, I mean, the thing that I find fascinating is that it's not just on the cutting edge stuff that we're not seeing a competitor to NVIDIA, like also on like 2-3 year old technology, right? I mean, we're not seeing a Hopper competitor popping up, old chipsets. It's kind of always been rumors that there's something coming up from China, but there doesn't seem to be anybody that is really, I mean, even making a mid or low market product. I think that is really eating into NVIDIA.
I think we're talking about infrastructure. Max, sorry, were you going to say something?
Yeah, I just wanted to add that I guess it speaks to the complexity of the semiconductors industry, because if you look historically, like in 20th century, companies used to be integrated in the sense that they both designed their chips and they manufactured them. But then over time, as economics shifted, they decided to focus on one specific area, and only like a few players, I believe Intel, Samsung, and what was the other one? I mean, over time, they just kind of narrowed down. So NVIDIA just focused on designing the chips only. Intel was the biggest player that did both things, but then they fell off as well and trying to reverse their fortunes. But again, like who knows how long and if it's going to be successful or not. And then essentially now with the new boost from AI, it's a very valid question.
I think Intel is no longer the biggest in anything, really. I think that is really a case study of a company in decline.
It's interesting.
They probably got too comfortable with their leading position.
Yeah, I think that it's interesting when we think about the semiconductor sort of value chain. Which parts of it do you think are best positioned, within the current climate in terms of what happens next? Are advanced, sort of GPU suppliers better positioned than, sort of legacy memory type players? Just wondered what your thoughts are on that, Max. In terms of with the value chain.
I guess it's just cutting edge stuff, to be honest. Yeah, NVIDIA is an obvious example, but then also the semiconductor manufacturing equipment players like ASML, they essentially have a monopoly in the EUV technology that goes into the production of those chips. So TSMC again, Samsung, is a strong player as well. And another category would be high bandwidth memory. So players like SK Hynix in Korea, Micron in the US. Unfortunately, from my personal point of view, when we think about players with like second tier or like old generation technology, they might get obsolete even faster. And again, if everyone focuses on these advanced chips and all the money essentially flows there, it just might the other players might be underutilized.
That's a good point. Alex, what do you think?
Yeah, I mean, I think everybody will see this in their own asset base kind of over the next year or two, right? I mean, NVIDIA is selling what, 1.2, 1.5 million Hopper chips a year, right? That's there's quite a few chips that are sitting somewhere that are being used somewhere, and now we have a technology which is, massively cheaper on a kind of per teraflop of computation in both capex and in opex. So I think you'll see these things. Quite frankly, I think if you were to ask me 2-3 years ago, what we were expecting, because if you look at kind of traditional cloud computing, you didn't just have the high-end stuff, right? You had a lot of workhorse servers that are cost competitive, that AWS, Azure, GCP just rent out and get a lot of mileage out of, that are sitting idle quite a bit on user accounts. So kind of in traditional cloud, you could understand why people have views of 5-6 years of depreciation, right? Because your old stuff is pretty competitive. And I think I would have thought 2-3 years ago that we'll see something similar in GPU, right? The 2-3-year-old stuff is still competitive. We're not utilizing capacity 100%. And now we're here, and I think we're utilizing whatever we have in chips. We're using that like at 100%, basically. And there are so clear-cut economic advantages because OPEX is so high to just move into the newest chipset, because you can cut a few percentage point of OPEX. Your capex is almost immediately worth it.
Yeah, I think it's going to be interesting, isn't it, in terms of investment analysis? That one thought that struck me with this semiconductor debate and depreciation is, the traditional maybe linear model might be outdated here in this sense, as in it's going to need to be more upfront loaded than just the traditional, let's put it over a certain time period and, depreciate in a steady route. It might need some thinking, and it'd be interesting to see when financial statements get produced, whether people are starting to adapt to that at the back end on that depreciation question, or they're still linear depreciating, these type of assets.
I mean, everybody like a year ago or so, everybody is put another year or so of useful life on their assets, right? On their server assets. And I think Google was the first, AWS did it, Meta did it, Microsoft did it. Everybody is moving to 5, even 6 years. And it's going to be painful if people kind of wake up to the reality that, like, we're gonna have like a massive. We're in the midst of the massive shift in generation for cutting edge chips, and NVIDIA is gonna bring them up in a 12 to 18 month cycle. And like, do you really have to now think about a 2-year useful life? Does your economics work with a 2-year useful life? I mean, if you read CoreWeave's S1 filing, the economics doesn't work with a 2-year useful life. The economics basically barely works with a 5-year useful life, but clearly not with a 2-year useful life.
What do you think, Max, in terms of this question particularly around depreciation and how to both handle it and assess it?
It's a valid question. I mean, to be honest, don't really have anything valuable to add to Alex's comments, but yeah, I fully agree that this needs to be reassessed, and it's not realistic to have this on a 5-year horizon. And maybe even 2 or 3 is kind of optimistic.
Mm-hmm. And you touched upon it earlier, Max, in this conversation, which I thought was good. The geopolitical word creeps in. What sort of flashpoints do you see in the semiconductor industry space coming up, or risk? What do you see as, you mentioned the T word, but, if you look more broadly, next 12, 18 months, if there is such a thing as being able to predict the future, what do you see as flashpoints that could be a real problem? Taiwan, you touched upon as well.
Yeah, I was going to say, like, Taiwan is the first thing that comes to my mind. I mean, Taiwan is just at the epicenter of this, I would say. given that TSMC actually manufactures those chips, and I'm not sure there's any other company that can replace them. I mean, Samsung is number 2, but they're still behind, and this is probably the hardest
More from
classified, as you say.
is that from your perspective, sort of supply chain, as you say, that sort of angle.
Yeah.
Alex, what is your thoughts?
Yeah, it's fascinating that we talk about fairly advanced technology, and the last 3 years of NVIDIA discussion have been dominated by supply chain issues, which is it's kind of it's slightly absurd. I mean, we clearly see kind of not just supply chain issues, right? We clearly see political creep into it, right? I mean, like, I don't think anybody. I think nobody was really surprised by the NVIDIA announcement that they are now under export controls. But the briskness of it and the absoluteness of it, I don't think anybody really expected. I mean, it's basically impossible now for NVIDIA to export anything into China. It's probably going to be impossible to do some of their re-exporting from Singapore or stuff like that. So it's going to be interesting to see. And it's clear that access to semiconductors is becoming a political issue.
I mean, you can see, don't want to use that phrase, a political soccer ball, football, but you can see that, as you've said, where the epicenter is from a geopolitical point of view. You could see it becoming that. So that's an interesting one. Just to sort of shift slightly the discussion, we haven't mentioned or talked a great deal about Google at the moment, and obviously its dominance in the AI space. Do you think that that's sustainable from their point of view, particularly given some of the discussion we've just had about changes in the semiconductor sort of space, and also from their point of view, the infrastructure and the follow through onto Google Ads and Google Search, etc. Alex, what's your thoughts on Google?
I think it's rightly so one of the places where there's a lot of disagreement right now in terms of their future outlook. I think they're basically, well, let's start with the non-obvious one, right? Their AI is actually really good. They are, I think, now the standard setter in terms of AI quality. And they clearly are. I think half a year ago, like, everybody, laughed them out of the room. Now they have highly competitive models at highly competitive pricing. Doesn't matter. Like, nobody's using Gemini, really. Like, no consumer is using Gemini. Everybody, like, the OpenAI has won, or at least temporarily won, the consumer battle. But they have competitive technology. But I think for Google, it's a matter of how much cannibalization does LLM chat interaction have to their traditional search, and on the other hand, how much can they upvalue their existing ad portfolio by putting AI to work on it and getting more bang out of every little spot that they have. I think it's a discussion that it's easy to say that Google might suffer a bit on the search side. We haven't seen in the numbers yet. And I think there's also a pretty good argument to say that they have a clear-cut case for using AI in-house to get more bang for the buck out of their net space.
Max, what's your thoughts?
Yeah, I think Google has a classic innovator's dilemma in front of them, where there is a real risk of cannibalization in the future, but they cannot not invest in AI. They must stay competitive, and as Alex mentioned, the recent models have become way more competitive. And I think when we think about the ads, yes, the search is still healthy, like 10%, I believe was the growth in the latest quarter, but they didn't actually release the click-through rate for those links below the AI overview summary. Yeah, I don't know. I think it's still an open question, but then we still must not forget that they have probably the largest amount of data among any other company. It's not just the search, it's also they have YouTube, they have Google Maps, they have Workspace and other tools. And also, like, from a historical perspective, they successfully navigated the shift to mobile. So I wouldn't write off Google at this point.
I think you make a good point about they have a proven track record, as you say. They are they have all those examples that you've just given. I think the interesting thing for me about Google in this discussion is the extent to which the payments space might impact them over the next few years. You know, that if you think about it now, people using AI search engines, as we said, Gemini's out there, but how many are actually using it compared to other things? But if you go onto like a ChatGPT and say, hey, I need to buy a pair of shoes, making that leap between I need to buy a pair of shoes and here's 3 retailers that you can click immediately and they'll deliver them straight to you, and then you handle the payment and it gets processed. I'm curious to see the extent to which the penetration of providers like Stripe and others into that AI space to cut out retailers might start to pull more people away from Google search, where traditionally people have gone on and typed, I need a pair of trainers near me, and then they've identified, not that I've ever done that, I should add, but pair of trainers near me, and that's how a lot of people have used Google. Aside from the research function, they've used it from a payment processing point of view. So I'm curious to see the changes in the payments industry, what effect that has over time on Google, albeit it's a Goliath of an organization, so it will take quite some time, I think, to shift. I don't know what your thoughts are on that, Max, around the integration of payments and Google, and whether some of my thoughts there around how that might change things are right or not.
To be honest with you, I don't have any insight on payments specifically. But then, as you mentioned, search, I think it's been around for 2 decades now, and it's just like a force of habit, and it will take time. Even speaking from like a personal experience, so ChatGPT was released back in November 22. It took me more than a year just to actually realize how useful it can be and start interacting with it more rather than with search. I would say now is my usage is roughly 60-40. So I use search like 40% of the times, and ChatGPT or Gemini. I actually do use Gemini 60% of the time. So yeah, I don't know. Honestly, I would be curious to hear Alex's thoughts on that.
Yeah. So what I find fascinated about the LLM space, or the chatbot space, the consumer-facing side of it, is that it has such a different monetization model than the internet had before, right? I mean, we're monetizing most chatbots are actually they have like amazing monetization, right? If you think about it, the average revenue per user for OpenAI must be in the $250 to $300, right? Because ChatGPT is running you $20 a month, and there are some users spending on their more premium plans. So that must be 2x Google's average revenue per user, right? Google roughly makes 250 billion a year. That probably has 2.5 billion users, right? So 2.5 billion users. That's quite a bit less in revenue per user, and Meta is at $50 revenue per user. So it's kind of fascinating that chatbots manage to get so much average revenue per user. And we still haven't started really monetizing, right? We still haven't done commerce. We still haven't done ads. We still haven't done all the other monetization strategies that we have developed over the last 20 years of the internet, of the commercial internet, into the space. And we're already outperforming a 20-year-old Google product, established Google product that is serving like 10 trillion search results every day.
It's interesting because attention for me is between the going forwards, this sort of, will AI, I guess, improve targeting for precision, precision targeting on Google Ads, and how does that square off against traditional search and reducing search because the ads are better targeted in the first place? You know what I mean? We all suffer from the ads appearing that we don't believe are relevant, and yet if that improves because of the AI sitting behind it, the models behind it, will that ultimately reduce search? Do you see what I mean? It's sort of a bit of a circular kind of question I'm grappling with.
Yeah, they've.
Sorry.
Oh, sorry. Please go ahead. Just a quick comment that Google's already talking that they are leveraging AI for better targeting. So it does increase the efficiency, and then they can charge advertisers more per click. But then the question is, as they provide their overviews, then the overall volume of search goes down. And then the question is, where's that balance? And, what's the final outcome? I think it's still an open question.
And I think from an investor perspective, really, this is incredibly fascinating. But if you have a view on AI is going to improve ad targeting and we're going to make so much more money from every ad space, right? You have a way cleaner way to express that, namely by going long Meta or going long Apple. You have two large, well-managed players in the space that don't have this confounder of what happens to how is my search being cannibalized by this, and I can still express my thesis that the market doesn't understand the kind of commercial value that AI brings to my ads business or to my e-commerce business. I have way better ways of expressing that view than investing in Google, and I think that's Google's big conundrum. It's become a stock for nobody.
Yeah, that's it. I've got a quote coming there. I can see that as a good headline, but a stock for nobody. That's quite an interesting, quite a powerful statement. Why do you say that, Alex? Because that's quite a powerful statement.
I think you can have a variety of ways. You can have a variety of views on AI's impact on the world and what it does to certain businesses. And I think Google isn't the best place to express any of these views, right? You have, even though I'm not the biggest fan of investing in Tesla, right? If you believe in self-driving technology, you have an outlet for that. If you believe in, we're gonna upcycle the value of our ads, I have Meta, I have Apple, and with Google, you have this Damocles sword of what's going to happen with search. Are we going to be in a world where search is going to be MySpace? Or it's going to be traditional Facebook, right? Where it still exists, it's still a sizable thing, but it's not taking in $75 billion a quarter anymore. And that's, I think that's for Google is a scary reality, because nothing else in Google makes really well. Sorry, that's unfair. Nothing but search and YouTube. But I mean, the cloud business is clearly number 3 out of 3 big ones. And nothing else really making money. I mean, search is still 85-90%. Search and YouTube are still 85-90% of Google's revenue.
What do you think, Max?
I was actually going to ask Alex a question, if you don't mind. I mean, I can see the case for Meta, but do you think in the case of Apple, that would make a dent in their revenue, like any meaningful change, specifically AI and ads?
So I see a clearer case for Meta, right? I think for Meta, it's really you are getting more revenue per single ad space. You're not losing ad space, and you'll eventually get off your crazy train of spending 65 billion a year on chips that, for whatever reason. And I think I still don't see the number this year coming in at that level. Be interesting to see what they did first quarter. I think on Apple's side, it really is the argument to make that, your hardware all of a sudden is more valuable because you have the personal assistants and you just increase the pricing, right? I mean, we've seen this with better cameras, where the average price of a phone has increased by, probably 50, 60%, and the cost hasn't, by, putting in better cameras, by having a more valuable product. And I think we've done a lot of tweaking on the hardware side. And maybe I think the hypothesis would be, right, really, you're getting more bang out of your hardware because the consumers perceive your hardware to be more valuable because they have, an amazing AI assistant on it.
Sorry, Max, you were going to say.
I'm just thinking about Apple's latest AI, essentially what they promised back in WWDC last year, and then so far how it's been handled and the releases, the functionality. I mean, yeah, in the future, I mean, hopefully, I think it will get better.
I mean, they're doing it the cheap way, right? I mean, they're doing their capex hasn't moved. Like, they're spending the same amount of capex that they've done before. They're not aggressively buying up GPUs anywhere. Their model approach is to, go to the big guys in the market and ask them to cooperate with them. I think that's all fair and good. I think it's a very conservative approach. I think I can understand the justification for the approach. I think it's not drinking the Kool-Aid of AI. It's trying to get the benefits very cheaply. But I think that really is Apple's. That's the bull case for Apple on the AI side, right? You're getting a lot of this incremental value from AI without really doing any investments. Because I mean, getting in the OpenAI model is, OpEx, and presumably, I mean, if Apple has shown one thing over the last decade or two, is that they really know how to get as much value out of their product, and how to price their product incredibly well, to extract maximum value out of their customer base.
Do you agree with that, Max?
Yeah, I think. Well, I think on the AI model question, over time they would still prefer to transition to the inbuilt. This is just my personal opinion, and not. I think ChatGPT integration is probably like a temporary solution. But yeah, on the install base, I agree, especially with now that all of the handsets and Macs and everything, they have the chips, Apple Silicon as well, so they kind of have the full control of the hardware as well.
But I think the fascinating thing for me is it's still all OpEx, right? They have custom silicon, but it's all there is no massive facility building this, right? It's all subcontracted out. It's all, somebody else's issue. You're probably running on a sixth or seventh of Google's capex, and your risk profile is kind of substantially lower because you're not. I mean, you have the upside, but you have very little of the downside.
So
they're probably more. I was just a quick comment. They're probably just more worried about tariffs now than AI.
Yeah. I mean, like Apple clearly has a different issue nowadays, right? I mean, like Apple's issue is not how to monetize their AI. I think if you touch any hardware, as Apple and Tesla can probably attest to, and as some others can attest to, right? World of hurt over the next year or so.
Which is sort of, I mean, we've just talked for nearly 45 minutes on the question about semiconductors, etc., and Google. How would you square that off then with, say, investment research frameworks are changing clearly because of the speed and dynamics we've just talked about, and how should, I guess, research frameworks adapt in the future, and what are your thoughts on how you begin to try and assess, a good analyst tries to assess some of what we've just talked about regarding, AI's impact on margins, depreciation, R&D, timelines, competitive moats, blah, blah, blah. What's your thoughts on that, Alex? The nature of investment analysis is changing.
I think there are two things. I think one of them is like how you actually do the job. And that's something we can kind of talk a lot about because, we're helping people change a bit how they do the job. Because it's always been an Excel game, and now we are in a chat world. So we're very much more focused on text, on qualitative, unstructured content, and that clearly has an impact on market on research, because you can do things nowadays that you only dreamt about 10, 15 years ago when everybody was starting to get excited about NLP and about text analysis. You can now actually do things that work and that make sense, and you can do them at scale. One thing that the quantitative side, the Excel side, always had as an advantage over the qualitative, the Word and chat side, was that an Excel spreadsheet is very, very easy to copy and to manipulate. Text is way harder, and now you can do some qualitative analysis scale, and I think that's exciting. I think it's an exciting time to be in the industry. I think in terms of how you think about investments. In the end, right, we are talking about CapEx projects. We're talking about massive amounts of CapEx projects at a scale that we have rarely seen. And we are talking about a lot of the input factors for them kind of changing on a day-by-day basis, whether it be by your vendor making your product obsolete, whether it's by politics, whether it's by tariffs. It's changing, but it's no different than building a nuclear plant.
Yeah, I like the way you frame that, between the tools and then the question about the investment itself. Max, with Israelov, which is where obviously you've co-founded and founded, what's your approach and how is that changing in terms of investment research? How are you finding the current wave of AI advancement, as Alex has mentioned, particularly in the qualitative space?
It's greatly increases our productivity. We use AI essentially on a daily basis, and I would say now it allows a small team to essentially analyze way more data. So you can go wider in the sense of how much data, how much of different type of information you can analyze, but then also how deeply we can go. And before that, that would be at the level that I personally consume information now. It would be just impossible. As Alex mentioned, it's very easy to copy and paste Excel, but then like with text, you actually need to read it, and also like a lot of the time it just takes to find the right document, to find the right information. Now the scale is we're talking about like a different scale essentially. But then again, as this becomes the new norm, I guess the demand, the minimum, essentially, as it becomes the new norm, then it will kind of be standard and expected, I would say.
I think it's fascinating I think we're all not old enough to kind of have lived through the advent of the computer and the internet in the industry. But it feels a bit like that, right? It feels a bit like, there's some share of the industry that has embraced these fancy, newly fangled technologies, and that make use of it. And there is still a fair chunk that hasn't. And I think we've seen with computers, with the internet, that there were periods of abnormal returns that you could earn from just having a more advanced, differentiated data set. Everybody is always dreaming of having this differentiated data stack from everyone else. I think now you can kind of realistically do that.
Mm-hmm. Mm-hmm. And actually, I do have some data on adoption rates. If James, you could open slide number 7. I wanted to show that, yes, obviously, like tech is the leading industry, but then you can see this in manufacturing, healthcare, arts, entertainment, recreation, finance, insurance, and even wholesale trade. And then when we think about the size of the companies that adopted, surprisingly, it's small enterprises are ahead of medium ones, showing that the adoption is actually widespread. And I believe, it does empower like smaller teams as well.
I think that's a really interesting slide, isn't it? In terms of the size of companies, because I think it's JP Morgan is it this week has come out and sort of said, lots of it that they're bringing in new procurement rules around AI adoption because they're seeing it as potentially areas where it's weak points in the organization where bad actors can kind of come in through some of the AI proliferation that's out there. And yet actually you look at your slide and as you say, it's was it the smaller ones that were attracting more people? Sorry, I'll put it back up again. The smaller enterprises. That's interesting, that dynamic between, like, as I say, I think it's JP saying he wants a full audit. They want a full audit of all AI sources because of the risks of breaches. And yet you see smaller organizations perhaps maybe have less of a concern about that pushing ahead. But really, a really interesting stat about adoption.
Large enterprises are obviously leading because they have the resources to deploy those AI systems and maybe even build their own in-house solutions. But then, I think it's just the economic case kind of becomes more obvious, and then this is where like the small companies are actually getting in.
Do you think that, possibly too early to tell, but do you think some of the cost dynamics coming down will accelerate the adoption within smaller organizations because technology that was previously only accessible to those larger ones because of cost and the ability to capex that is now, with the cost falling, smaller organizations find things more accessible? Do you think that's true as a statement?
That's probably the biggest driver actually. As again, you can get ChatGPT for $20 per month or like 25 as part of the team. It's definitely the case.
Yeah. And do you think there's skills? Because one thing I've noticed is there's a shift now in skills in the industry. I don't know whether you find this, Alex, as well, that within the analyst community, the skill base is shifting. Obviously, the core fundamentals are still there, but the ability to utilize AI capability to unlock some of the qualitative power of being able to assess unstructured documents, etc. It's changing the nature of the skill of the person who's utilizing the tools. Do you see that happening?
I think it's a fascinating question. I think to a degree, yes. I mean, every technology shift kind of produces people that adopt better and people that adopt worse. But I think, to me, the fascinating thing is that, like, we've really had these ideas as an industry, right? We had these ideas of, hey, I want to get all the text that the company puts out and put it into a sentiment graph. I want to, automatically I summarize things. I want to automatically identify what's changed and what hasn't in complex documents. We've had these ideas for a while. And I think everybody that was like a technically inclined analyst in the industry has played around with those, right? Has had their little Python script that did, NLP-like analyses, that played around with early bird models, and that played around with kind of the very, very infancy of LLMs, but always kind of dismayed by it really, really not working. And I think what we're seeing now is that kind of all of these ideas that people have banged their head against for the last 15 years are coming to, people like us, like people that professionally do AI and finance. Because they are, like, everybody has their ideas, everybody has tried things and never really gotten them to work. And now all of a sudden it's still not easy. It's still hard. My light is switching off again.
And it's not AI driven, that, I should say.
No, it's the least AI enabled light you can imagine. But we're really seeing, I think there are a lot of ideas in the industry. Things have gotten from impossible to hard. And now, like, a lot of people are working through making hard workable.
Definitely. Well, we're coming up on the last couple of minutes, so this time has flown by. Max, any final thoughts from you? AI, semiconductors, Google. It's been a really interesting hour's discussion. Any final thoughts from you?
Well, I guess in general, it's just probably a transformative technology like the internet, and then from thinking about like research processes and experience, I guess until it becomes the standard, you can get a competitive advantage. I mean, if you adopt fast and implement it in an efficient way, but it also like levels the playing field and democratizes the whole thing. But then, yeah, when it becomes a standard, that's probably going to be like a different picture.
Alex, final thoughts from you?
Yeah, it's clearly it's an exciting time to be in our space and tech space, but it's also, this quarter is bonkers so far in terms of what companies say about their experience with the early onset of tariffs, supply chain issues coming in, politics, crises here and there. It is absolutely bonkers. And I think if you're like us, if you're reading a lot of company reports, you really see what's happening on the ground for a lot of these companies and what they're experiencing, and how dismal some of the outlooks are that people have, which is unfortunate, but it's absolutely bonkers right now.
Well,
yeah, the world is moving faster.
Definitely, Max. Definitely. Well, for sure, this conversation hasn't been bonkers. So thank you to Max and Alex. And for those in the audience who are concerned that Alex is in Spain or Portugal with power cuts, I can assure you he isn't. He's somewhere else in the world. We've discussed AI, Google, and semiconductors today. If you'd like to continue this discussion, follow us on LinkedIn, Marvin Labs, or Israelov Financial. Also, we host these LinkedIn Live events monthly. Please join us at future ones or visit the Marvin Labs app to feel and explore firsthand how Marvin Labs does analysis regarding investments and earnings releases. Thank you, everybody.
Thank you.
Thank you.
Thanks, Mike. Thanks, James.
Thank you, Alex. Thank you, James.